What is going on, everyone, and welcome back to the channel. Today, we need to talk about something massive that just happened in the silver market. It's a day that many have been waiting for, and it could be a turning point for precious metals and the entire financial system. Silver just smashed through its all-time high, hitting an incredible $69.46 per ounce. This isn't just another small jump. This is a monumental surge that is sending shockwaves through the financial world. For years, we've talked about the potential of silver, its industrial demand, its role as a monetary metal, and the constant price suppression. Well, today, it looks like the dam has finally broken. So how did we get here? For months, even years, we've seen a perfect storm brewing. We've had unprecedented money printing from central banks around the globe, leading to soaring inflation that's eroding the purchasing power of our everyday dollars. People are waking up and realizing that the cash in their bank accounts is losing value by the day. They're looking for a safe haven, a real store of value, and many are turning to gold and, increasingly, to silver. Silver has been called poor man's gold, but that's a huge understatement. The industrial demand for silver is exploding. It's a critical component in solar panels, electric vehicles, 5G technology, and countless other high-tech applications. Unlike gold, a significant portion of the silver that is mined gets used up and is never recovered. This creates a constant and growing demand that puts a structural squeeze on supply. For the longest time, the price of silver has been artificially held down. Many analysts point to the massive short positions held by major banks on the COMEX exchange. These are essentially huge bets that the price of silver will go down. By creating and selling massive amounts of paper silver, which is silver that doesn't physically exist, they've been able to manipulate the market and keep a lid on the price. This has been a source of immense frustration for silver investors who see the glaring disconnect between the paper price and the real-world physical demand. You could see it in the premiums for physical silver coins and bars. Even when the spot price was low, you had to pay significantly more to get your hands on the actual metal. That was a clear signal that the physical market was much tighter than the paper market was letting on. But today, something snapped. The pressure became too much to contain. The surge to over $69 an ounce wasn't just a regular market move. It was a violent unwinding of these short positions. When the price started to skyrocket, the banks holding these massive short bets were forced to buy back silver at much higher prices to cover their positions. This is what's known as a short squeeze, and it creates a feedback loop. The buying to cover shorts pushes the price even higher, forcing more shorts to cover, and so on. It's like a financial avalanche, and right now, the big banks are on the wrong side of it. We're hearing reports of staggering losses, potentially in the billions of dollars, for some of the biggest players who have been shorting silver for years. This isn't just a bad day at the office for them. This could be a catastrophic event that exposes the fragility of their positions and the entire derivatives market. This moment is incredibly significant. It validates what so many in the precious metals community have been saying for years. You cannot suppress a physical commodity with paper forever. Eventually, physical reality asserts itself. The demand for real, tangible silver from investors and industries has finally overwhelmed the paper manipulation. This isn't just about making money on a trade. It's about a fundamental shift in the financial landscape. It's a vote of no confidence in fiat currencies and the institutions that manage them. When people rush to hard assets like silver, it's a sign that they are losing faith in the system. And when the very banks that are supposed to be the pillars of that system are getting wiped out by the move, it tells you that a major paradigm shift is underway. So, what does this mean for the average person? If you've been stacking silver, congratulations. Your foresight and patience are paying off in a big way. You understood that holding a real asset is the ultimate form of financial insurance. But even if you haven't bought any silver yet, this is a major wake-up call. It's a stark reminder of the risks present in the current financial system, The value of your savings, your pension, and your investments are all tied to a system that is showing major cracks. This event with silver could be the canary in the coal mine, signaling much broader instability to come. It is a signal to everyone to start paying attention to where you are holding your wealth and to consider diversifying into assets that are outside of the traditional banking and financial system. Let's think about the ripple effects. This isn't just contained to the silver market. What happens when a few major banks take on such massive losses? It could lead to a credit crunch. They might have to sell other assets to cover their silver losses, which could put downward pressure on the stock market or other commodities. It could also lead to a crisis of confidence in the banking sector itself. If these supposedly too-big-to-fail institutions can make such a colossal error in judgment, what other hidden risks are lurking on their balance sheets? This is how financial contagions start. It begins in one corner of the market and quickly spreads to others. Regulators and central banks will likely be scrambling behind the scenes to contain the damage, but they can't print physical silver. They can print more currency, but doing so would only devalue it further and likely drive even more people into the safety of precious metals, exacerbating the very problem they're trying to solve. Looking ahead, where does silver go from here? Many analysts who were calling for triple-digit silver long before this move believe this is just the beginning. Breaking the all-time high is a huge psychological barrier. Now that it has been cleared, we are in a period of price discovery. There is no historical resistance to hold it back. The short squeeze might have been the catalyst, but the underlying fundamentals of supply and demand are what will carry it forward. With the green energy transition demanding more silver for solar panels and EVs, and with investors continuing to seek a hedge against inflation and systemic risk, the case for a much higher silver price remains incredibly strong. Some are now talking about $100 an ounce, not as a distant dream, but as the next logical target. And when you look at the historic gold-to-silver ratio, which has been as low as 15-1, it suggests that silver still has a tremendous amount of room to run, even to catch up with gold's recent performance. This is a historic day. We are witnessing the power of a free market finally breaking free from the chains of manipulation. We are seeing the consequences of reckless monetary policy and the wisdom of holding tangible assets. It's more than just a number on a screen. It's a fundamental reevaluation of what constitutes real money and real value. What the banks are experiencing today is the pain that comes from betting against a physical reality. They tried to defy the laws of supply and demand, and today those laws fought back with a vengeance. This story is still developing, and we'll be covering it every step of the way. The next few days and weeks are going to be absolutely critical. Will the banks be able to absorb these losses, or will we see some major financial institutions in serious trouble? Will central banks intervene? How will this impact the broader markets? These are the questions we will be tracking. Make sure you are subscribed with notifications on because you will not want to miss our updates on this rapidly unfolding situation. This is a moment we'll be talking about for years to come. Thanks for watching, and I'll see you in the next video.